Hey, what's going on, family? It's your boy MC Fire coming at you again with another fireside chat. We're looking at the trades here, tapping right in to post the apocalypse. That is Jerome Powell. We love Jerome Powell. He is a gift that keeps on giving. If you guys know anything about the channel, down is a good thing on this channel because down means you get things at a discount. I don't know if anybody ever really goes to the store and it's like, yeah, I really enjoy paying higher prices for things. Us as options traders, you're going to pay higher prices because premiums are higher. But if you want to get into stocks and overall just increase your asset portfolio, then a drop is what you need. Now, I've been watching kind of financial news and essentially what's been going on. I'm going to kind of talk through this, but we're really going to tap into what happened. I'm going to give you the short of it right now. The short of it is, yes, the Fed did ended up cutting rates. And you're like, well, MC Fire, isn't that a good thing? Isn't that what the market already priced in? Didn't the market say that they were going to cut rates? In particular, the Fed, right? Yes, that is absolutely 100% correct. The Fed did say they were going to cut rates, and they did. The issue is that their projections forward for cutting rates in 2025, instead of us getting 4 rate cuts in 2025, we're only getting 2. The reason why is the Fed is pivoting what they're concerned about. They're less concerned about the job market, right? The labor market, it was about a 0.1% spike in unemployment, right? So they're a little bit more less concerned about that and a little bit more concerned about other things. I'm going to put a link in the description for another YouTube channel actually that explains what happened, what's going on with the Fed, and what they're concerned about in way greater detail. We're not going to cover it today, but if you want to watch it today, you can definitely hit that link where the guy explains it extremely well. Very succinct, actually a really good guy that I watch sometimes to kind of give me a different perspective. I already have my own perspectives, but he explains it, and I like the way he explained it, so I'll put it in there. What does this mean for positions moving forward? I know you guys saw at the tail end of yesterday, we got into two plays, and we're gonna go and talk about those right now. So as it stands right now, United Health, what's going on with the CEO and his passing, the we went on and took an opportunity to buy there with a stop out potentially at the lows at 475.82. I got in yesterday, kind of around market open. It pushed, rotated between two kind of relative two standard deviations and the VWAP. So relatively bullish if you think about it as a a bull flag setup there, and has since is continuing to show signs to be continuing bullish. It's back above here, catching the yesterday individuals off sides. They still got caught off sides, right? So this kind of blowout candle to the downside, I kind of get a buy bias at around 3 ATR. That's kind of where I sit to, like on the lows, kind of get more of a buy bias off 3 ATR with triggers. Okay, doesn't always work, but when it does, it's pretty keen, right? 3 ATR on a weekly is extremely extended, even if things are super volatile. Okay, so the fundamentals of the company really haven't changed, and it's on sale, right? So I'll take that. I wasn't expecting it to get this low. I thought it was probably going to rotate off of this rotational zone. I had no clue that it was going to get down to 3 ATR on United Health. So let's go take a look back really quick, just so that we could see here in 4.8 what it kind of did, and see if there's the market might not necessarily it definitely rhymes, right? So to the point, right? This is the 3 ATR drop here, and you're getting indications that there could be a potential reversal, right? So you got this setup candle in play, this setup candle in play, and this setup candle in play. Once we kind of see there across above there at around 3 ATR, massive rally back to the mean. So we're looking to kind of replicate that massive rally, at least back to the mean. at this point, this is kind of where I would be looking to at the 8 pair moving average. This is a reversion to the main trade, right? I'm not really looking for it to hit levels. I'm looking for it to go back to the 8, minimum the 8. When you get retracement, going back to the 8 before continuation in a power trend, highly probable. So I'd be looking for it to go back to the 8 pair moving average before we make a decision. And as you can see, it's pretty far extended. So pushing back to the 8 pair moving average, what I believe is likely to do for United Health. Also, MU, absolute bloodbath. So I picked. Let's go look at Market Watch here. I'm gonna show you via Market Watch, and this is why this is so hilarious to me. The entire market yesterday was red, and I probably picked the best and the worst stocks on yesterday to acquire. Right? If you look at this sea, absolute sea of red. Okay, there is one blotch of green. And the biggest blotch of that green is United Health. The biggest blotch of that green is United Health. But the bloodiest of the bloodbath is MU. It got hit so hard yesterday, and I actually added on. So let me show you. This is also to prove why risk management is so important. I'm going to go to the after hours, because essentially the bloodbath happened after hours. Not only did Jerome Powell have an effect on the overall market, but the United Health, it's saying that the even though the market, or even though the earnings were well within my relative estimations, the market took that as, oh, you guys are below earnings. So it's open season, and they really went open season on the stock, man. Sold off way higher than expected, got all the way down to 85.57. Family, this is totally fine. Why is this totally fine? Because risk to reward, risk management is absolutely key. So if you guys know anything about what we talk about on this channel, we talk about defense wins games, offense sells tickets. Overall, this position only makes up less than 1% of the account. Less than 1% of the account. So you should never have more than 1% of your total portfolio, and no more than 2% of your total portfolio in a single position. Okay. So exposure wise to the overall portfolio, options wise, it's extremely low. The most I'll have options exposure totally in the market. Let's say I have 6 positions. The most it'll amount to is like $12,000. So the beautiful part is that this is about 1%, less than 1% of the total portfolio. And even if it goes to zero, unfortunate, but it is it makes up a component. You're already dealing with leveraged instruments. There's no real reason to go any higher than that. If you risk 1% to make 3%, that's good. If you make risk 1% to make 2%, that's good money. And so this drop. So what do we do here? If you go over, let's go look at the monitor tab here. We're gonna select that MU. We're gonna expand it here. Boom. So if you see here, the market's obviously not open. We actually took 2 ads. We took one ad initial, and then we added on one to follow up. Both of these right now are, I'm going to tell you right now, they're probably like negative 100%. So what does that mean? The most I can lose, family, the most I can lose for this option is what I paid for, because I was buying options. The most I can lose is what I paid for. So the beautiful part is I've already set my risk, right? I set my risk on the buy. I didn't set my risk on the sell. I didn't set my risk when I close it. By that time, it's too late. I already accepted the risk when I took the purchase. Okay. So the risk to me is on the buy side, not on the sell side. So if we get United Health or Micron Technologies, if we get that actually pushing to the upside, like if this oversold is it actually ends up fighting to get back, which is totally fine. I could see that crossing up halfway. I believe that there could be continuation even to hit our level, which would be wild. It went down to 85 and it's already up to 92 pre-market. So Yeah, that could be a thing. I don't think it's gonna get anywhere close today, but if it gets above like 97.21, we could be out of hot water. It's unfortunate really that it gets all the way down here to about 85, which is where you'd want to be getting it anyway. So since I showed you guys that entry on that play on the add-on the 1 minute earnings, man, they are very interesting. Earnings plays, they're very very interesting. They can be interesting. Sometimes they be in your favor. You gotta respect it, right? So if you can't handle the volatility, if you can't, don't play earnings. If you're not gonna have a plan to play earnings, don't play earnings. I would say avoid earnings. Get out ahead of earnings 3-4 days ahead of time, so you don't involve any leaks or spikes in volatility. All right, let's go talk about the markets though. SPY in particular. SPY, boom. So SPY, as you notice, massive drop, but we haven't really gone anywhere major. And what do I mean by that? The market was already, we were already looking for a pullback, guys. Put that in perspective. We were already looking for a potential pullback. The market was already extended. The market was already kind of close to 3 ATR territory on the weeklies. So a pullback into your moving average cloud is right in line with it just happened in a day as opposed to it taking 3-4 weeks to get there. It just happened in one day. So what does that mean? That means awesome. You get to buy things on the cheap. Now, with that being said, I would wait. The way I treat these candles is these massive candles is if you can get above the halfway mark, like let's go to the daily here. Let's take a look at that. If you can get above the halfway mark on these things, then you could look to see, a potential continuation to the upside. But if you get a pullback or bounce off of support there, then you could look to see some continuation to the downside. So what do I mean? Head and shoulder pattern here, here. So if it comes up here and reject that, completes your head and shoulders pattern, look to see some downside. Really, the idea is wait and see. This is really a wait and see market. If you can get a break below 583.87, right? Expect more downside. But if you can get a break above this rotational level at 600 psychologically, then expect more upside. Really 648. If you can get above 648, expect a lot of upside, right? Because the head and shoulders pattern would have been broken, and you'll be in the clear for potential upside. It would have reacted off of this, and would be off to the races. People are, I think, sentiment wise, we just have to wait and see. But essentially, the market needed to sell off anyway. The market was very hot. So a lot of your spies, Qs, an early indication is going to be definitely the Russell. It's the weakest out of the three. IWM, that is the weakest out of the three. So at this level, if it can break above 22694, because this is kind of choppy, it pushed out. If it taps that and retests, we want to know. We want to know. Let me mark that level out for you guys, because essentially we want to know if it's going to play around in that area for a pullback. We want to see that. Okay, that's really huge. So my leading indication on markets is not the Qs, is not the SPY. The SPY and the Qs relative strength is very strong. The Russell is the one that's relatively weak. So this could be the canary in the coal mine, so to speak, for if we can't get above this level to continue to see more downside. If we look over here for the Russell, yeah, like you are well below the 21, or you're below the 21 period moving average. The 8 period moving average is pushing down. The 21 period moving average is now pushing down. Unbalanced volume is descending. So all those factors in place, you can see a rotation down to 198. And then the real fear, the real woes of the market might kick in into the market. As it stands, second there, I'll mute that. As it stands right now, though, kind of pushing with the rest of the market slightly up, but we'll see. This is kind of a wait and see market. You almost need to kind of sit this one out. If you don't have a lot of capital, you need to go ahead and sit this one out. until it gets above these levels and you get in the clear. If it starts testing and then failing, you kind of know what you need to do. But wait and see is going to be the order of the day. Don't look to take trades in the morning, right at open, because we trust me, you need to be waiting and seeing. I'm waiting and seeing, and unless you're going to be trading, day trading with the volatility, if you're a swing trader, waiting and seeing, waiting for the market to do what it needs to do, pick a direction so that we could, or catch some people slipping, then that'd be nice. Let's go hit a lot of the heavily weighted stuff real quick so you can kind of see what's going on under the hood. So we'll go tap Amazon. Let's tap some of the big boys. Kind of, it's going to be a little bit of the same story everywhere, but as you can see, Amazon kind of pulling back. If we could see a pullback to this rotational zone, or pivot zone, excuse me, that'd be right in line with what Amazon needs to do anyway. Okay, we're not looking necessarily to be buyers at this level until it pulls back and comes down and picks us up at these levels. So be watching out for a pullback into the 216. If we start getting a bounce off the level, expect more highs. If you get a bounce bull trap rejection, then if you start trading below this range, then look for the next pivot. These are like market fundamentals one-on-one. Telling you, we can look at Tesla. We've been talking about Tesla till we're blue in the face, but essentially, it's too hot. It's, this is kind of what the market kind of needs a little bit. The market is reacting post earnings really positively though on Tesla, but again, we're right here at this point where a reaction, wait and see, really, really wait and see. If it gets to this location and it starts failing, then you could see maybe a potential for a reversion to the mean trade for sure. You have the Nvidia. Okay, we've been talking about Nvidia till we're blue in the face as well, but with as large as it is, kind of can't go without talking about it, right? So already some buying pressure as like the other ones. This double bounce here at the low of 126.5, coming in on the daily, right? We don't really take the daily levels, but it's sometimes good to kind of know what they are. If you wanted to chart those, you can. I like to keep my charts a little cleaner, so I don't chart those levels. But there is a couple bounces within the daily. Like I looked back a little bit a while ago, there was a couple bounces at that level, so it makes total sense why. You can see it right here. That right here, did give a double bounce and has since pushed. So if it pushes above these levels, look for it to like be in this rotational zone. This is your new floor. This is your new ceiling, and you could see some potential growth. But if it starts rejecting off of this level here, like if it starts popping up here and failing at VWAP, so like that, you can have some more downside risk. I'd be targeting these lows at 126.5. Just kind of wait and see. You want to see a break, retest of this level and a push. If you see a couple like this stuff, you don't want to see that. Double tops at like resistance, not a good look at all for Nvidia. And this could be also a canary in the coal mine. If a major chip maker is selling off, you got AMD kind of already was selling off, right? Major sell off, right? ASML selling off, ASML, right? It might be an opportunity to get these bad boys on cheap. They're on sale, right? So they're cooling off a little bit from highs. People are having to reevaluate, hey, how am I justifying the price to earnings as it stands right now? Where's the money coming from, right? To be able to just keep running 3, 4, 5, 6 x of what we're already doing, right? Or has this train already left the station, so to speak? So if you think about it in terms of AI and what AI is going to do, it's going to absolutely revolutionize the way we do everything. It's going to be as powerful as like Steam and as powerful as the internet all combined into one. Why? Because Steam revolutionized the way we lived our everyday lives, right? There was real practical ways for power and energy and movement with Steam. Revolutionized everything. every facet of our lives at the time. Steam had a way to change that, right? The internet was different because the internet, even though the internet came out, and as we understand, it touches every part of our lives today. Um, the market was still trying to figure out what its uses were, right? Before we had like Facebook and YouTube and all this other stuff, the internet, or people really didn't know at the beginning of its practical uses. Whereas AI is completely different. AI, people use it and are pushing efficiency models in their current market today. They're taking what they use today and they're making everything more efficient that they use currently right now. So it's only gonna make things, if you have something good, it's only gonna make it better. If you have something bad, you're gonna at least be able to compete. And if you don't use AI, it's almost like you're gonna get left behind, and at a very increasing rate. So the chip manufacturers and the software companies that utilize it, one that we talk about all the time, Palantir, those people that are at the cutting edge of those things in defense, in industry, and efficiency, those individuals are going to benefit the most. And those are the ones we watch on this channel, right? So we're watching Palantir Technology do that in defense. You're already seeing some rallying here. So what would be the plan for Palantir, right? Ideally, the zones really haven't changed. If you get above a 76.86, I could be potentially looking for more upside, but it's more of a wait and see. I'm not really looking to overextend here. It'll be essentially the same thing. Ideally, I want to average in way lower than this. I'm not even kidding, guys. Like, I put an alert here at 76.06, and even that I might not even respect it, but I might like sell puts at this level, right? If we're being bullish, right? Just getting some premium, right? We already have shares, so like the whole point is to get in at a really good price, and getting in above 3 ACR, it could keep going. Never know, right? What's high can go higher, but I wouldn't even consider it until 76.06 on the pullback. Right now, it's already pushing that level. If you see, it's already pushing up. So the market is saying, hey, it stands right now, people are willing to step in and take some buys. It's not complete capitulation via Jerome Powell. Another one that's kind of stepped up here is this guy right here, already starting to buy back as well. The market stepping in and buying some of that pullback. But as you can see, it's not all roses and sunshines, right? You're kind of regularly below VWAP. This is pre-market, so the levels are kind of the same. If we chart this bad boy up, this rotational zone we'll go high, boom. We're not going to add this week's pullback. What we'll do is we'll mark this high, and then we'll work our way up. You'll see in like a slight chart. Excuse me. And then we'll go ahead and put the gap in here. So there's a gap, thrust push, pullback, kind of double tap there. And we'll use that as well, using our weekly chart to throw our levels in. There you go. So kind of at the bottom of a rotation anyway, in this rotational zone. If it pushes to the high, we just kind of have to wait and see. Hopefully on the daily, we start getting some tighter candles, setup candles, where we can make a informed decision as to what we're going to do. But the reality is we want to see momentum kick back up, and we're probably going to get an indication of that, like something like this or like this. And momentum is going to start kicking back up here. Okay, we need our momentum to kick back up before we make decisions in that regards. So those are some of the things to watch out for AVGO. Also, kind of selling off, but with a slight bounce. But AVGO in a little more hot water, considering the Havas gap here that it could very well fill. It's more of a wait and see. Okay, so go take a look at the flex grid here. It is not out of hot water here for AVGO. We went on and took our money off the table for AVGO ahead of, kind of in line with our overall strategy. So we kind of wanted, if it got below this anyway, we were going to pull it off. It expires in 2 days, our option contract that we got down here. So after rolling it about 5 times and it expired in 2 days, I think it's a pretty good run. We actually closed it slightly positive as well, which is kind of goofy. The premiums had swelled that much due to the volatility. So shout out to us there on the volatility for AVGO. We're going to go TSM, Taiwan Semiconductors, still looking almost unfazed, which is crazy. This is why I'm kind of putting this guy on here, because looking at the big boys, as you can see, the pullback was almost like a drop in a cup. Well in line with its bullish sentiment. So yeah, just kind of watch this bad boy. Even with bad news, this is kind of the day that you need to be evaluating what has relative strength. In Taiwan Semiconductors, as you can see right now, still in a very developing of a triangle up here. I'm gonna start marking that for you guys. You can see what I'm seeing. But you could essentially say, okay, we're in a triangle-like formation. Now, all that means to me is that there's increased buying pressure. People are not necessarily willing to just let it go at the first sign of danger. So just something to keep in note, right? It doesn't have to be perfect. I just like to denote it as buying pressure, right? Some people use that as law. I don't. It's just buying pressure. So Taiwan Semiconductor, you could look to see a buy at break of high. In traditional senses, this is not your full base. I would take your base at this zone right here, right? Go ahead, put the rotational zone for you. Well, bam. So there it is. So nice pivots there. So it's testing that pivot. That's where it stopped. If you took one full rotational pivot and you stop, pretty bullish to me, right? You're not breaking zones. So so that's pretty much where we are. Let's go look at some other big ones in other sectors. JP Morgan. We'll look at Bank of America as well, right? A little different story here in the XLF, right? If you could see that, hey, this bad boy can potentially fill the gap, that is very, very doable. We'll go ahead and mark that up for you guys where the gap is. So there's your gap start right before it went up, and then we'll put the zone here for where the gap is there on the daily. Boom. And then we'll go ahead and throw something that highs there. Boom. Right. So these kind of other levels that you could be watching, right? See it, look for a rotation down to that pivot high there, and then kind of wait and see. If it breaks below, retest, then you take it to the downside. If you start seeing it bounce and get it back above this rotational zone, go ahead and take it. Wait for it to break these rotational zones, guys. I'm telling you, because trading right now, the market is going to be undecided. Okay, people kind of don't know what to make of it. They don't know what big money is going to do as regards to, is their outlook still bullish? Was this massive 3% pullback in the market enough? Did they price it all in a day, kind of thing? Are they ahead of it? What's the real story? So, order of the day, just be patient, wait and see, right? Not Boeing, Bank of America. Sorry, Bank of America. So yeah, Bank of America not looking too bad. Kind of same story as what we saw there. And if you go look at the XLF in general, right? Kind of same story, right? Gaps here, gaps here, and then massive pullback to fill the gap. So kind of watch and see what it does. You're gonna want it to get back above the this level here, retest, and then start showing signs of a push. If you could do that, what do I mean? Let's go here. Okay, so ideally you want to see it push above this 48.68 level, come back down, some sort of retest. Could be in after hours, could be regular hours, really doesn't matter. And then signs of continuation. for an uptrend. If you see a downtrend, look for again the gap fill, which has already kind of done that, and then a breakdown below, retest, and then complete the rotation to the downside. That's how I would look at that. So right now it's respecting that 47.79 level. If it breaks below, retest and fails, you know what to do. If it breaks above here, retest and continues, you know what to do. Okay. XLC. Kind of give you guys a market summary, right? Just to see where we are after the bloodbath. So XLC took a hit, but I mean nothing too crazy. This is like well within line of our pullback for an uptrend, right? Well within line. So my thing is the XLC is showing a lot of relative strength, even right now, getting back up to kind of where our alert is in pre-market. So my idea is, okay, will the market continue? These aren't necessarily things I'm actively putting money into currently. These are just saying, hey, is the market more likely to continue if you break above the 50% mark on a lot of these candles? Okay, if you're getting above 50% on a lot of these candles relatively, and I start seeing these pings come in, the market's is showing strength. The shenanigans coming out of the Fed aren't really having people phased, right? I do think the market is a little overextended, but the market is saying, hey, if we're willing to step in and buy, then the outlook for 2025 is going to be very, 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 very exciting, right? Even though things are extended, I think this can be very, very, very exciting. But we kind of needed the pullback anyway. XLK, technology sector, right within the rotational zone anyway, here. So if it was pushing highs, it's not pushing highs no more, which is good for us, right? We're hoping to kind of throw in some more set of candles in and around this zone, in this rotational zone, to make a play. You had a couple in this rotational zone that you definitely capitalized on. Here's a base hit there, nice double that adds, and then it keeps firing off. You got a nice blowout candle up here, for like that run. So you kind of see it. It's there, and you had an opportunity for potential buy biased play here. So here and even down here, because I know this guy right here, I missed that massive run for that doohickey, right? Just absolutely massive. Starting the rally, and at least you got a heads up on it, right? Whereas even this one, right, you get a play, you take that play, it's a slight base hit. So if you're looking at rotation, you can make a decision or take some off the table, but that's still a really good move. 166 to 172, right? $10 move, nothing to scoff at for sure. This play right here, though, definitely the one that cuts the cake, coming off the lows here, looking to take rotation, and it ends up hitting. So system in full effect. System here, same thing, boom. Nice indication here as well, boom. This one, boom. You're seeing it, right? Even if you take the ones in the middle, they're kind of dicey, but you want a nice pullback, nice pullback, and then it crosses above it in short order. That's kind of what it's doing over at United Health that we showed you guys. Let's go take a look at Bitcoin. Sorry, BTC. It's for all my Bitcoin people. The market is being weird though. Like they're saying like there was a giant like you see the news like, oh, Bitcoin's failing, but I'm like, guys, it's not even below 100K. So if it's not even below 100K, like crashing isn't the word I would use to describe this at all, right? Crashing isn't it. In a defined uptrend, been in a defined uptrend for a minute. So Bitcoin futures, I guess, whatever you want to call it, is in full effect here. And don't let anyone tell you otherwise, because the pullback, it almost shrugged it off. Almost didn't even. I guess the whole point is the Bitcoin is supposed to be a contrarian to the market. So it's its own asset class. So yeah. Is it bullish? I have a very bullish outlook on Bitcoin. I like to take the ETF though. in it, and yeah, the the outlook for me is really really strong for Bitcoin. I'm not looking to not looking to say, I'm not looking to be a conspiracy theorist. I think that Bitcoin makes perfect sense. Um, and Jerome Powell has stated that legally, right, legally, there is no framework for Bitcoin as of yet, but that could change, right? Especially with the new administration. And this is another thing I want to kind of make you guys aware of. With the new administration, even though the Fed has said that they are going to cut rates, even as soon as I heard that the Fed has two fewer rate cuts, I was like, yeah, it's easy to say that now because when the new administration comes in, yes, Jerome Powell runs the Fed, but uh, the new administration that's coming in isn't necessarily gonna just I believe, let him have free reign over that aspect. I believe that with certain people's history of wanting to hire and fire people, if the Fed is not kind of putting out the numbers that administration kind of wants to see, it is well within the rights that the Fed chair acts at the behest of the president of the United States, right? Which we all know will be Donald J. Trump. So that could be very interesting. The Fed probably will have to pivot. Will have to pivot going into 2025. That is just something to keep in mind in a month or two. The Fed probably will have to pivot going into 2025, right? The video I'm gonna link in there actually confirmed what I was already thinking. I was like, okay, but you're still gonna have to acquiesce to essentially your boss, or be jobless, right? Or in that capacity, not jobless, but won't be working at the Fed because he has made a history of firing people, for sure. Um, so yeah, guys, that's kind of the market outlook, and we'll go over some of the setups going into market open, kind of show you what we've got, what available. But really, I'm telling you right now, these are just to kind of check in on the stocks and how much they've sold off, or what have you, what has not sold off, so to speak. These are not positions that you should look to be taking until the major levels that I was talking about in the SPY and in the Qs for the wait and see, right? Ideally, a break below here, retest is set up for a fail. A cross above this is a hey, we're not necessarily out of hot waters, but I would be looking to see a setup break above 600. If you don't get a break above 600, why is that important? Because you got a potential head and shoulders pattern, boom boom, and at 600, if it fails, look for rotation down to here. So you need to be extremely patient. It could be weeks, like maybe 2 weeks. um if you absolutely have to trade, narrow the time frame down to less than a day. Don't be sticking your neck out there. Gap and goes are going to be all over the place. Mark my words. Gap and goes are going to be all over the place. Let's start at the top, work our way down. ABT, uptrend, got a setup candle right there, marked it already. ACN, very similar story, halfway point, bouncing off the lows, potentially could see rotation. This is actually a little bit more cleaner because we were looking for a pullback to that level anyway. Adobe, right? Absolutely capitulation of Adobe, but it started way before that. Remember, we shouted out that there was a potential for a break on Adobe. Couldn't get into it because of the gap and go, but the setup worked, right, and he also was an earnings play. So post earnings, shout out to Adobe. AEP, AEP, in the downtrend, shorten the rip is actually very, very applicable here, even from traditional standpoint. Downtrend, break below previous week, stop at a previous week's high, and take it down to the rotation with rolls all the way down. So AEP in kind of hot water. AMD, same thing. Getting to the point where we were looking to be a bias buyer, you kind of know how I feel about the AI stocks, AMD, Nvidia, AI, Sophie, MU, TSM, anything that makes the AI computer chip. Definitely be looking on your radar for long-term buy and holds for sure. That's going to be the new market. ASML is actually next on the list. I actually put a mark above that level because unbalanced volume is kind of giving me some pretty juicy triggers. I'm looking at the unbalanced volume like, okay, that's pretty powerful. Didn't get all the way down to 3 ATR, but at some point I'm looking to just accept the risk. That's kind of where I'm at right now. I'm kind of looking to accept the risk on a long-term buy and hold for ASML. You just take maybe take up long-term buy and hold position for poor man's you get a poor man's vertical, so to speak, and you can finagle this pretty nicely. You got AVGO, kind of talked about that already. Uh, American Water, we took profits on American Water. It's actually still selling off. So this downtrend is in 3 ATR territory, and that's pretty much that. Let me zoom in here. Sorry about that. So American Water absolutely capitulated. Took the initial play here, took the roll here, took it off here, and it's actually blowout candle anyway for that. So didn't wait till the close. Just went on and pulled it off there because we're getting close to 3 ATR. Wanted to take it off a little early. American Express, shout out to American Express. Similar story. If you can start getting above the halfway point there, or excuse me, let's get it above break a pivot. That'd be nice. That'd be really nice. So a little bit more on American Express there if we can get a break above pivot. But as it stands right now, looking pretty juicy. BA, we do have a buy biased already been adding buying and adding into BA. Trend change also on BA. So with the trend change, this setup candle is in effect, believe it or not. I've been talking about BA, and I was like, hey, I don't know why people aren't mentioning Boeing as one of three manufacturers, pretty much in its own cartel, so to speak, for commercial aviation. And I mean, we're talking about relatively higher pivots overall for Boeing. So this makes perfect sense for the buy there long term. And the trend change kind of makes sense to me. Even with this trend change, have nice opportunities for rallies up into 3 ATR territory anyway. So took a buy here, and shout out to it. BKNG, nice pullback in an uptrend. If you're noticing, even though with this massive pullback, you know, it's barely okay, excellently sold. Nice, shout out to it. So MU, yeah, definitely below that for sure. Getting slaughtered there. Let's go mark this up. We got EXL, but all the alerts coming in here. I like to go back and look at them, but not gonna be perfect on all these bad boys. So yeah, we in line with our system, we went on and took that position off, even with the volatility. It could have been like a wait and see for this guy, but as you can see, there was no bounce in XLE, so we kind of just left that order out in the open. For that, there was like no pre-market bounce for that, so we went on and just took that. We're gonna take that off. Left that order out there for it to take it off as soon as market open. There, boom. Right. Looking. Excuse me. Thank you. So essentially the play was off the setup, right? Nice juicy pullback here. Saw it cross above, took the buy, and then immediately started selling off after that. Happens, guys. Totally okay. Saving some of the premium there on our end, but if it has more room to give, it is what it is. So we want to just keep in line to our system. Again, there was no pre-market bounce at all in this. So there was no pre-market bounce at all in that play. So I was like, man, it is what it is. And if it continues to fail, we're not going to be along for that ride. Kind of see what MU's doing, if they're getting any life out of it. Probably not. Yep. So Micron is at a point where it just is what it is. That's probably, you can almost write it off at this point. And if we go look at the monitor tab, it's probably down like 100+%, right? go take a peek. Couple verticals here. So yeah, you're looking at a 92% total loss there for the Micron. So it makes total sense at this point to kind of hold it, and it's not necessarily back holding. Like I said, the maximum that we could lose is what we paid for the option. So if it's gone down this much, wait and see to see what happens. But it's really just kind of unfortunate. Let me tell you, kind of unfortunate on this one. That the and then you also track the lagging indicators. So this was setting up to an upside, changing trend. Now it's changing trend to the downside. There it is. But could get a bounce off low. Well, you'll never know. Let's go look at the market. Really, this is what we want to watch and see on the bounce. What are we getting into today? Okay. So look at that. Couple tests here at this level. Actually, a triple bottom. I'm not sure if this is a fluke in the market, but count it. It touches. So as the right stands right now, above VWAP, and you got double greens, so we're off to the races, right? Little volume candle here breaks above that. You almost take buy at the open. Wouldn't take that buy and then pop up to, if it gets up to the 2 standard deviations level, you'll look to take some off the table or let it go. So yeah, the Qs and the Russell are doing. So very similar story. No red candle 2 minutes before opening, but you're getting double greens on the 10-minute moving averages. So that's a good look. Right. The Russell's remember the canary in the coal mine at this failing point here. If it gets above that failing point, I would say, hey, that's a good look. But if we start getting up here and it fails, not a good look at all. So that resistance is going to be absolutely crucial for the Russell as our early warning what the market might do, since it is relatively the weakest. Yeah. Kind of trading wider here for NVIDIA. Higher than its close, but not necessarily what you want to see on a stock like NVIDIA. Kind of chopping around resistance here below VWAP, below resistance. Not exactly what you want to see. Things could turn around quickly though, so just kind of keep that in mind. Again, not what you want to see. Immediate spike at resistance and rejection for Tesla. So again, guys, levels, super crucial, super important. So mark this one. We're pushed out of. Yeah, that makes more sense. And then boom, cannons. Yep. So yeah, a little bit of a wait and see here. Just a wait and see game. Let's go look at some alerts because we had alert in there. We'll go look at market watch here. Market watch. Heat map starting to look green. Look at that. Heat map looking green. Not too bad. Some weakness in Apple here. UNH. Some weakness there. ABT. J&J weakness. NVO weakness. Let's go look at the NVO real quick. Yeah, in a downtrend there. Setup, if you notice, you had a setup candle off 3 ATR. Could have took that rip up to the 8 pair moving average. That's kind of what I mean by reversion to the mean trade. If you get a reversion to the mean idea, it's a reversion mean off the setup into maybe a moving average. So you kind of do have to watch as the moving average comes into your take profit zone. It's going to be crucial for you to track that. For eyeball sake, a lot of times what I do is I say for my entry to my where the 8 pair moving average is, I mark the halfway point, put an alert there. If it gets up to the halfway point, then I definitely need to watch it, right? But reversion to the mean trade there. That's kind of what we want to do for UNH. So if we can get a reversion to the mean trade, you can see the 8-pair moving average and our position here, and you could look to see about a halfway point, put an alert there. I want to know when it gets up to that point, because you're going to be around in that ballpark once that happens anyway, as a moving average looks to catch up. So it's about what you can expect, but we wanted to actually tap that, a moving average. Let's go, not monitor, market watch, sorry. And then we're going to alerts, not quotes. Yep, cool. Next will be, I could have swore we saw one for 12.19. Here's a 12.19. Meta, there it is. Okay. Yeah, Meta. That was yesterday. So Meta, that's the one we missed. Okay. Already crossing the halfway point. So Meta showing a lot of relative strength there, pre-market. There it is. Giving clear. Ooh, it bounced up there, peekabooed it, and is failing. Look at that. That is insane in the membrane. Look at that. That is crazy. So in the pre-market, kind of traded up there, popped in there, and then failed. This is kind of why we marked the halfway point, guys. This is so much the reason why we marked the halfway point. It literally peekabooed at around the halfway point and started to fail, right? The market respects traditionally the halfway point on big candles. If you can get above that, you could see some continuation. It tapped it and is now starting to fail. What level was that? Just to be spot on with what we're talking about. Price condition at or above 610.37, right? I'm telling you guys, I'm starting to hit 610.37. So it literally peekabooed it, peekabooed that puppy, and then failed off of it. The jury's still out, but man, let me tell you. Let me put this pivot here. Marking that pivot. So it needs to stay above that with the test, and the VRTX is in play currently. You already, whew, brutal. um, Pretty sweet that the fact that it's to the downside already at 3 ATR. You could set up for a potential bounce, right? You take this at the buy, and then stop out at the low. I wouldn't take it necessarily right now, because well, no, you can take it right now. No, take that back. No, don't take it right now. You'd want to ideally be maybe it come back and come halfway, minimum halfway between 2 ATR and the VWAP. Okay. For you to have, just treat it like a day trade, right? Let it come back down to VWAP. If it starts throwing setups off VWAP, then it can push. I'll show you guys. That's what probably I could do on Sunday as well. You show you guys some day trading setups that we know kind of work with the system extremely well. And it's kind of what I look for a day trade going into VWAP throughout the day around VWAP. So absolutely brutal for Vertex. Man, that's crazy. Spy. Look at that. Not too bad at all. Okay. So respecting the rotational zone here. Kind of pushing up to the halfway mark, getting close. But remember, we're watching out for that head and shoulders. If it starts to develop that head and shoulders pattern, watch out, man. Watch out if it breaks above our alert, we want to watch what's going to do around that 648. If it starts rejecting off of that and doesn't break through, I don't know. Yeah, it's going to be increased volatility going through here. Oh, let's track the VIX. Yeah, this is another one. Fear index popping up to 28. 28, the VIX. So getting back down to the 20s, not too shabby at all, man. But yeah, the VIX taking a massive spike. It's basically the fear index. It kind of tracks. People call it the fear index on like where people are and do they believe that the equities are actually going to be negative. So if these bad boys are negative, let me tell you, it is we get some action here. We're gonna zoom out here, right? The worst of it. So really spiking up here is standard, right? If you look at previous kind of spikes in around this 25 to 40 range. Anything above like 50 is like what I consider like super extreme, like watch out territory. But if you start seeing a this is actually a good sign for the VIX to already kind of be down in the 20s after going to 28. So also watching the VIX is going to be pretty crucial. If we can continue to see failing in the VIX, equities can see a sigh of relief. That is actually really good for equities to see the VIX if it starts to fail. So shout out to the VIX. Let's go look at gold. We got kind of failing here in gold. Silver, kind of same thing. Probably, yep, there it is. Silver failing as well. Not looking too good for silver, right? Kind of came and went off the 32. Unfortunate. We were hoping to get 50. I was a little aggressive. Get up to 50 before the end of the year because of the way silver was going. But the market's woes have kind of been stated with what's going on with the election. Everyone's extremely optimistic right now. So that's we were looking to see a push in silver. But hey, it gives you an opportunity to buy it back at low. Do take a look at our canary in the coal mine here. See if we can find some support over here at VWAP. If you can find some support at VWAP, maybe, man. Doesn't look like it wants to find any support at VWAP. Still have a double green, so could respect the moving averages. Highly unlikely though, with the way how volatile the market is, and it still has to get above resistance. So we'll keep you guys tuned, but we'll go ahead and call it for today. Thank you guys so very much. I'm glad I get to spend a little extra time with you guys. It's your boy MC Fire. You guys have a wonderful day. We'll be chatting with you soon. Have a good day and goodbye.